Hey, welcome back to Tech Tune-Up. I'm your host, Paul Meeks. We are brought to you by my good friends at Benzinga, and also where I work here in the Bayou of Charleston, South Carolina, Harvest Portfolio Management. No surprise, that's where I manage most of my tech portfolios. So today is February 11, 2025. We're now back on a weekly show cadence. And remember, at the end of the program, I'll take your questions. And there are going to be some stocks I know nothing about, so I won't bullshit you on those. I'll just say pass. But of course, following the tech sector since the late 80s, I got some game, particularly with the larger cap names. So as we always do at this portion of the program, let's go through some of the stock news, not just for its own sake, but for its ripple effects on other companies and tech trends. So first of all, we start with Alphabet. The last time we appeared, Alphabet and AMD were going to announce their quarters after that close. So we previewed them. On the review side, for my AI infrastructure building trade that I'm sticking with, I'm happy that the company reconfirmed and maybe even increased their expected capital expenditures for 25. But in and of itself, the quarter had some pluses, it had some minuses. It was a little bit too messy for me. And I've held the stock for many, many years. So my cost basis is very low. And with fresh capital, I would probably stay on the sidelines with Alphabet. There were some things I thought were just too squirrely. Next, here is AMD. I have AMD circled up when it shows me a catalyst to be a really good rebound tech trade, because this stock has been slaughtered. And unfortunately, when they reported last week, we didn't get any better news. It seems to me that they're getting further and further behind Nvidia in the AI chip group, which is really surprising because in the past, this company, particularly under their CEO, Dr. Lisa Su, has been a pretty good execution team, pretty solid manufacturing. This goes to show you that Nvidia doesn't have an insurmountable lead, but what Nvidia does is very, very tough. And even a company that I admire like AMD is struggling to narrow that competitive gap. I will buy AMD. I will tell you when. I think it has one of the best relative values in the sector, but we need a catalyst. And the catalyst is show me some goods, and we probably won't hear about this till next quarter, that you are closing the AI GPU gap with your buddies over at Nvidia. Palantir, I told you that I've turned more positive on the fundamentals. It has been on my watch list. I like the acceleration. It also is a nice Trump 2.0 trade. And I also like the fact that they are diversifying away from the spy agencies to some real corporate customers. That being said, I think it is one of the most expensive stocks I've seen in a long, long time. And I've been doing this a long, long time. So in good conscience, I can't join this momentum on the Palantir trade. I guarantee you at some point, there'll be even the slightest whiff of bad news, and this stock is priced to perfection and then some. You'll get a chance to buy it lower, and that's when I plan to strike. Spotify also announced their results since we last were together. Pretty impressed. I'd like to buy it on a dip, though. Next, our buddies at Tesla are always in the news. And this is very interesting to me that, remember, we're looking for stock tells. And sometimes it's the result of a company's customer. Sometimes it's a result of a company's supplier. And one of the biggest suppliers, and it's a semiconductor company out of Europe called ST Microelectronics, very big in the electric vehicle business. And of course, very big customer is Tesla. They had a really poor quarter, citing a significant, not a little, a significant slowdown in demand. So Tesla, as you know, your buddy Elon Musk is playing the shell game on the streets of New York. right? The three-card Monty. Under one hand, he has the declining, pretty sad EV business, but he wants to distract you with the other stuff, which is the robots and autonomous driving. And I said before, he first talked about autonomous driving in 2015, expected to have 1 million robo-taxis on the road in 2016, and now it's 2025. Next is Uber. Now, Uber is a stock. It's been on our list. Then it was on our watch list. I'll tell you, this is kind of interesting. Their quarter that they reported, again, kind of crummy. There were some important metrics in which they disappointed me. However, on the stock's drop, the well-known activist hedge fund manager, Bill Ackman, announced that he had accumulated a stake in the company of over $2 billion. And when you get a marquee guy, well-respected, taking an interest in Uber at its dip price, also sent out a press release praising Uber's management team and also saying that they have a bulletproof business model. I don't know if I necessarily agree with that, but that is why Uber is popped. For a long time, that stock was bouncing up to $70 resistance and then going back again and again and again. But on the Ackman announcement, we've broken through that resistance level at $70. And now it becomes the floor, not the ceiling. And the stock has risen all the way to 78. So we'll see what happens. But this is based on an admired investor's interest in the company, not necessarily anything that transpired in their last quarter reported or in the quarter that they're guiding to next. Amazon reported since we last were together. And even though Amazon dipped after the quarter, and there were some things, chiefly their revenue guide for the next quarter, for the quarter ended March 31, was less than Wall Street expected. But from what I can tell, it's not a fundamental issue. It's a issue with the appreciation of the US dollar. So they take a revenue currency hit. And that actually might get worse as we go forward. So when I see companies, admired companies, they don't have a fundamental problem. You know, they might have what we call macroeconomic problem, right? Reacting to foreign currency exchange. It might be a buy. So my two favorite Mag 7 companies coming out of earnings seasons are Meta and Amazon. So Meta performed very well after they reported. Amazon took a hickey, but I don't usually like to buy stocks when they're down, right? I'm a little bit of a momentum investor, which you have to be in this space to be successful. But Amazon, buy on that dip. We'll see what happens. You know, don't worry about foreign currency, though it is impacted by Trump 2.0 policies. But I think Amazon will be just fine. Again, of the Mag 7, I like two. Meta and Amazon. Next, this is a really interesting tale about Apple. As you may know, I thought Apple had a pretty shitty quarter. You know, Apple hasn't grown its total revenues for probably when we get through the end of this fiscal year, 4 or 5 years in a row, right? It's kind of growing at the same rate as the US economy. You know, that is not a tech company. Tech companies require fast and accelerating revenue growth. But even though the company may poo-poo it, China is very important to Apple. And of course, now they're in the crosshairs of geopolitics. So last quarter, Greater China is what they call it, was 15% of their total revenues. Of course, it was down a lot from the prior year. And of course, they make most of their iPhones there. And the iPhone product line is 60% of their total revenues. So despite what they say, Apple is in deep with China. And this is interesting. The regulators in China have started an investigation into the company's business practices. This is the first time that I can recall since Apple's had over the years a lucrative partnership with the Chinese government that they're actually turning the quarter and on a regulatory basis attacking their former partner for the first time. This could bode pretty ill for Apple. So now we're a week or so after DeepSeek, the small AI lab in China, made their announcement that they built a pretty good large language model in 2 months for less than $6 million. What is the aftermath? Well, remember on the day of the announcement, the AI infrastructure plays got slammed because the belief was, or the assumption was, all the hyperscalers that are spending tens of billions of dollars on AI infrastructure a year will pare back their investments because they can do it more cheaply with this Chinese route. And of course, all the semiconductor companies that support that ramp and the server companies and the AI data center builders were all slammed. Think on the semiconductor side, Nvidia, Marvell, Broadcom, the server companies like SMCI, Dell, HPE. But here's where I come out on this. I must admit, and I think the leaders, even the technologists at these major companies in Silicon Valley, must admit that the technology was pretty elegant. There is some value added to the technology. This is technology that we should copy if we can. However, that's a portion of it. The rest of it is, there is some suspicious stuff, the facts, the PR, the timing to kind of refute Trump's return to the presidency. I think some of it's bullshit. So we've heard from all the hyperscalers. Amazon was the last one to report its quarter last Thursday. And to a man, they have all confirmed, if not increased, their AI infrastructure spending budgets for 2025. That's what I was looking for. So they are telling you, even though they may publicly say, hey, DeepSeek has got some game, that they're not going to change their AI infrastructure capital expenditures, which is super important to the way I have my tech portfolio orchestrated. Next, the saga, which is OpenAI. So we do know that OpenAI has cozied up to the Japanese tech conglomerate SoftBank. Actually, SoftBank and OpenAI have been discussing a $40 billion investment by SoftBank in the company. And if they do that, that would give OpenAI a pre-money, before the deal, $260 billion valuation for a private company. That is enormous. That is absolutely enormous. But then Elon Musk, who is competing with OpenAI, with XAI, and a real rival of Sam Altman, the CEO of OpenAI, says that he wants to buy the company. He wants to control the company for $97 billion. So that's just stupid. I don't know why he does these things, but I will tell you what, the one thing that SoftBank doesn't have, but Elon Musk has, is Elon Musk has a bromance with one President Donald Trump. So I don't know. Maybe this is a legit threat, but a $97 billion offer for a company that's already being valued at $260 billion doesn't make sense. And it's a simple way, I think, for Elon Musk to try to muddy the waters, maybe even on a regulatory basis, to slow down OpenAI, which is a competitor. The last thing is I'm pretty interested in, after the close this very evening, the business update from Supermicro, SMCI. You may recall a year or so ago, SMCI was my favorite server company. And remember, Tech was buying a lot of servers to populate these AI data centers. But then they got embroiled in a financial accounting scandal, and it was legit. And the regulators went after them, and it was a bag of shit. And I tell you, in investing, even though you might be selling at a loss, whenever you get whiff of an accounting scandal, you've got to exit. And I exited stage left. And now time has passed. The stock went way, way down. It's come back recently. But I really want to see if A, is the financial accounting solved? And B, what's the outlook? They should be benefiting from selling servers again, but we will see. So next, let's get into some of the buys and sells. Here's my fresh money tech list. Not a lot of changes this week. Remember, yellow that you see here is a stock that's in my bullpen. It's on my waiting list. I'm not buying it yet. Green companies, if a portfolio comes to Harvest Portfolio Management today and they want Meeks' tech model, I'm probably buying them fresh. And then I don't have any on the list. Last week I threw in the towel and painted Micron red, but now it's gone. So let's take a look at the companies that I have in the probation zone. In yellow, Microsoft, kind of a squirrely quarter, I thought. Told you about that last week. Alphabet I just mentioned. PayPal, I was interested, got kind of expensive, was running up, and then their quarter disappointed me. They're in my penalty box. ASM Lithography, the Dutch semiconductor capital equipment company I like, but my cost basis is lower, and there's still some weird stuff going on, particularly with international trade, so I'm staying off the case. I'm really interested in this week, AppLovin. APP is reporting their results. Now, they had a huge move after they reported their results last quarter, but ever since then, the stock has been range bound. And so we need some good news to break it up out of the range, or if it's bad news, it's going to trade below the range, and then there could be some hell to pay. So I'm super intrigued about AppLovin. It could go in either direction for me, and we will know. I believe their quarterly report is tomorrow. As of now, I believe I'm in the stock at 326, TBD, to be determined. CrowdStrike, I like. I've always been worried about the legal liability from Delta Airlines, but it seems that people have pushed through it. We'll see. Spotify, right? I told you that I really liked Spotify's quarter last week, but stock's a little expensive for me. Deckers. Ain't a tech stock, man. It's the Hoka shoes. I have some for running. Should probably run more, drop a few pounds. But anyway, I have a very good consumer analyst in my crew, and I think Deckers could be super interesting. And then there's Take-Two Interactive, which is new for me this week. Take-Two Interactive, after waiting, is finally said that Grand Theft Auto 6 will be released this fall. Now, this company has been bleeding pretty badly, and Grand Theft Auto 6 will be a monumental release, and they haven't had an update in a long time. This company will go from loser to hero overnight. And now we have the date. If they release it in the fall, it'll be available for huge buying at Christmas. Now, on this announcement, right, this was a couple of days ago, the stock went up 15% in one day. So what I'm waiting to do is, as it settles a little bit, then I'm going to strike. I don't want to buy a stock that's up 15% in one day. So those are the ones that are a bit controversial. So I wanted to tell you the tale. I'm looking here. The only stock that is new on my green fresh money buy list is Raytheon, ticker symbol RTX. Obviously a defense company. So keep that in mind if you're opposed to such investments. But anyway, a nice quarter. And I always follow these companies because I think they're at least indirectly tech plays. So on the fresh money buy list goes Raytheon, ticker RTX. So now get your questions ready. We're going to go to the trends, then we'll answer some questions. Tech trends. Remember, I'm all about rates. I'm going to talk about this at the beginning of Tech Trends every single time because interest rates go up, tech stocks go down, and vice versa. This is kind of interesting to me because as we speak, unless the testimony is wrapped up, Fed Chair Jay Powell is in front of the Senate Banking Committee, which he is obligated to do a couple times a year, talking about, obviously, what's the trend in rates. So the CME Fed Watch tool tells us that the next time that the Fed gets together, and they get together about every 6 weeks, the next meeting is going to be March 19th. They're essentially saying there's going to be, like there was last meeting, no change in rates. And this is really interesting because the Fed essentially, through its monetary policy, controls the short-term interest rate in the States, The one that's a bit more popular that I in the classroom call America's risk-free rate is the current yield, about 4.5% on the U.S. Treasury 10-year note. And here we have a little bit of a conflict, or maybe even a compromise between Trump and the Federal Reserve Board, which was designed to be apolitical. So the new U.S. Treasury Secretary, who comes from my town, Charleston, South Carolina, his name is Scott Bessent. He said that they're not going to hassle Jay Powell over at the Fed about the short-term rate, but they want to pull all the levers they can with fiscal policy to drop the 10-year rate. The 10-year rate is the one that actually is used as the basis for building a lot of loan rates when you buy a car or when you buy a house. So maybe they can coexist, because during the campaign, Trump said that he wanted to dump Jay Powell, which he himself nominated for his role back in 2016 during Trump 1.0. But now, let's let the Fed do their thing. It seems to be the agreement that they made, and through that's monetary policy, and through fiscal policy, which is controlled by Congress, we'll focus on taxing and spending. Hopefully, the economy continues to grow. We avoid a recession. Inflation gets down to the 2% handle, which is the goal of the Fed. And we can also drop the 10-year rate, which Professor Meeks at the classroom at the Citadel calls America's risk-free rate. We'll see, but it is super important for the valuation of our tech stocks. Next, the Trump administration is still using tariffs as a bludgeon to beat up everybody else. Also, Trump seemed to not agree. He's not going to allow the merger, which was proposed back in 23, of Nippon Steel, of U.S. Steel, but claims that Nippon Steel, without taking over our U.S. Steel, is going to invest in the company. I find that a little bit hard to believe. What's in it for Nippon Steel? But no surprise, this was all announced last Friday. And then on Monday, we have tariffs introduced, 25% for steel and aluminum. Do you think the Monday announcement had anything to do with the Friday announcement in the steel industry? Of course it did. This is really interesting to me. A lot of the crypto ETFs and even the coins themselves, like Bitcoin, rose in since mid-October, when folks started to place bets that Trump was going to win. So he's the crypto president. But this is particularly interesting. He really sealed the deal and showed us he's in that camp, because he's ordered the Department of Justice to order the Securities and Exchange Commission to stand down on its regulatory assault of Binance. Binance is one of the biggest crypto exchanges. The company was originally founded and run out of China. Then it took its HQ to Japan. Then it took its headquarters to Malta. And now we don't know where those guys are. But anyway, this was a marquee get for the SEC to try to regulate crypto. And at the end of the day, it's a Chinese-oriented company. And now the SEC has been told to back down. Don't even pursue it. This is real proof that Trump wants to support crypto, not just in the US, but all the firms that support it around the world. I think it's a really interesting tell. And then I want to conclude before we get to your questions. The results are in for AI infrastructure spending for 25. Remember, with the DeepSeek announcement, people were saying, oh my God, those original forecasts are off. But last year, the hyperscaler spent $223 billion on stuff from Nvidia and others. And this year, they are planning not just sticking with the original budget, but they're going to boost it 46% from 24 to 25. And now, with or without this Chinese DeepSeek threat, they're going to spend $325 billion this year. So the AI infrastructure, I never thought it was off. I never encouraged you to step out of the way. Anyway, back on. And so Nvidia is also back on my list. No yellow there, no waiting. Fresh money buy for Meeks clients today. So those are the tech trends I think are the most important. If you have any questions, please share them. Thoughts on nat gas? I think that there is a continued play in nat gas. I've invested in some of the pipelines. I think there's a continued play in nuclear, right? We've talked about the likes of Constellation Energy Group. I like very much, particularly after the announced merger with Calpine. So yes, we are going to have a voracious demand to supply power to these AI data centers. So yes, I'm interested in those plays. And the nice thing about some of these nat gas stocks, which is kind of rare for a tech investor, is you might also pick up some dividend yield. And that's coming from a tech investor who rarely sees dividends in my covered companies. Paul, 3 big stocks to avoid besides SMCI. Well, SMCI, of course, I'm avoiding, but they will give us an update, which may change my tune, but I got to wait until 4 o'clock Eastern time today. I still think, as I've told you before, I'm shocked, despite the love that everybody seems to have for Musk about the price of Tesla, right? Avoiding the really poor performing EV business and focusing people on robots and autonomous taxis that I will believe when I see them. So I think that's one of them. And also Apple, right? Apple is beloved. Now, it's not in the same camp as Tesla because Apple still generates about $1 billion of free cash flow every week because it doesn't spend a lot on R&D and it doesn't spend a lot on capital expenditures. But the iPhone business is in a rut, and that's 60% of revenues. And I don't think AI on an iPhone is going to get most Americans to run to the store and upgrade their iPhone. So anyway, I also think that's a stock America's loved, but I think it's also, you can't buy it. I think it's really expensive for a company that hasn't grown its top line for several years. So those are a couple of ideas. Any thoughts on Tuya? Yeah, Tuya had a little bit of a deep seek. Let's get reinterested in Chinese tech bounce. I have I don't want to say a mole in the organization. They'll put me in jail. But I have good connections with the company. I don't know. I originally was interested in this thing. I think it was like $1.25, $1.30 a share. If it does have a big pop, it's always been kind of a speculative play for me. I would probably take your profits if you have them, exit stage left. Let's see if we can get it again. I'll keep an eye on the trade for you, and I'll let you know when to get back in. But it may be an idea to take the profits. Thoughts on Snow? I like the company. Should continue to be very well positioned, particularly under the AI infrastructure build. Stock had been pretty expensive. And so in the last year, when a couple of their quarters were a little dicey, the company was so expensive that it took a huge hickey, right? Even with a whiff that their very fast revenue growth was slowing a little bit. So I'd say maybe that's one that I keep because I do follow it on my waiting list, right? I would paint it yellow. I'm just a little bit worried. I have to take a look at valuation and make sure not even the littlest of negative surprises, which, companies are run by human beings. It's inevitable that'll happen, will not just whack the stock again, as we saw with a couple of quarterly misses in the last year. SKX. Yeah, I don't have a comment. Sorry about that. Don't want to spin a tail on something I don't really know. All right, guys. Well, that's all the time we have for Tech Trends for this week. We will see you, same bat channel, next week. Hey, have a good one. I'll be watching tech very closely for you. Be well.